Hey guys, welcome back to another video today, and I'm here to talk about where I think the stock market is going and what I'm doing to prepare for it. I think it's pretty valuable. I think it's pretty, intuitive, the thoughts that I have on it and where I think it's going to go. So if you guys do enjoy this video, be sure to smash that like button. Also subscribe to the channel. I really appreciate the support. And without further ado, let's get right into it. So I am a little sick. I'm sorry for my voice. If I have to clear my throat, something like that. I'm sorry in advance if you're wearing headphones, but that might happen throughout this video. So I do just want to get this video to you guys because this is, time sensitive. This is urgent. I think that there's a lot of stocks that you should buy right now, on this crash, and then we may continue to crash so you can dollar cost average down. And I think that there's a lot of things that are going on in the market right now that we have to cover. So, for example, the first thing I want to go over is that a lot of stocks are down big. So, if we take a look at AMD, it's down over 7% today. My largest holding by far. AMD actually sold some recently, but I mean, this one's down almost $600 for me today. Am I worried? No, but I mean, look at AMD. In the past 3 months, they're up 24%. In the past week, they're down 20%. These stocks that are trading at values that are maybe a little high in relation to where they, usually are getting pretty hit pretty hard. So SoFi, probably my favorite stock in the stock market, it's getting hit. It's getting hit hard. We see the past month they're down 13%. This past week they're down 25%. Their company's, stock price got cut, a fourth of their stock price got cut off the top. So these companies are taking a pretty big hit. And that's reflective in the company's valuation as well. So for example, Cheesecake Factory, you see I'm down almost 10% on this one right now. I was up a lot on Cheesecake Factory. It's down 7% past week, 21% in the past month, 30% in the past 3 months, and then down only 10% year to date. But at one point it was up 42% year to date. So perfect time to buy Cheesecake Factory right now. I'm not going to talk about that this video. I have a lot of videos on that. But for example, this is Market Dash right here. If you guys do enjoy this platform, they give a lot of great information. 7-day free trial in the description below. The PE ratio for this one is 13. No company that's making money should have a 13 PE ratio. They're undervalued by 40%. 40%, that's a great, metric that Market Dash allows, shows as well. A stock being down 40%, from where they should be priced is pretty insane. We see their high target price is 62% upside. Their low target price is a 4% upside. Their average target price is, about where the intrinsic value is. I really like Cheesecake Factory. I think that there's a lot of good things going on in this company, and they're going to, make you a lot of money if you buy them right now because I mean, I'm not going to get into that, but I mean, Cheesecake Factory, for example, is getting hit hard. This is a company that isn't even tech. The tech companies are getting hit really hard. We see, even Celsius. Celsius is under $40 a share now. That's just screaming buy to me. I mean, these companies that are down this much, 12%, 38% in the past month. Celsius is down almost 40% in the past month. These stocks are getting hit hard. And basically, the thesis for this video is that this is just the beginning. This is just the beginning. The Buffett, the Buffett indicator is one of my favorite things to do when valuing the stock market as a whole. This is definitely a long-term indicator. This isn't one, you're going to check every day, but maybe every year you're going to kind of see like where the stock market space is. So this is pretty telling, to say the least. The Buffett standard, or we see the Buffett indicator, every time it's hit two standard deviations, it's crashed. I mean, it's gone down a lot. So we see that it hits two standard deviations, in 1960, 768. And then it dropped all the way to the historical trend line. It rose a little bit, dropped all the way to down one standard deviation. We see that it also rose again in 2000. This was the dot-com bubble. It dropped a lot right after that. And then we see that another time that it hit it is 2021, dropped a lot after that, and then we're way over it right now. So every time it's gone over it, it's dropped pretty substantially. So I'm thinking that, history is not indicative of future results, as every investor knows that's not the case, but you could probably get a good idea of what's going to happen. Another, metric that I like to look at is the Shiller PE ratio. It's called SHILLER. This is something that's very interesting. We see the mean is 17, the median is 16. Right now we are at 38.55. It's dropped a little bit. We see that it was a little bit higher, if we zoom in right there. It's gone down a little bit, but not a lot, just real teeny bit very recently. And that's because the market's crashing right now. So the PE ratio, the average PE ratio look, it went down, 1.57% today, which is kind of crazy. But the average PE ratio for every stock in the stock market is 38 right now. It should not be that way. It should not be that way at all. That's way too high. That's, Apple. Let's say on average, every stock in the stock market is the same as Apple. That's just not true. That's just not a true statement. So that's something that you got to look at, and you got to take that in and think, okay, it's probably a little overvalued. This is the main indicator. That's why I talked about it first, is we're trading above 2 standard deviations. And it's been this way for, a good amount of time. We see we're pretty well above 2 standard deviations. I'd say we're nearing 3 right now, which isn't even on this chart because it's never happened. And we're probably going to see a pretty big drop in relation to that. I mean, how long can the stock market trade above 2 standard deviations? That's something I ask myself. That's, a pretty good question, not to pat myself on the back, but probably not that long. Even you see the market, every time it hit this, it bounced back immediately. It's pretty crazy that you see in April is pretty big drop right here. If we look at the S&P, it kind of reflects, just the general stock market. So that's why I look at it. We see in April right here, there was that drop that we see on the Buffett P ratio is trading really high. Stock market's trading really high right now. I wouldn't be surprised. This is I'm not a big technical analysis guy. Excuse me. I'm not a big technical analysis guy, but October 10th, it was at 653. Right now we're at 653. If it breaks through this level, I'm not a technical analysis guy at all. But I mean, this is a pretty, good level right here to base things off of, in my opinion. I think that it's probably, not too far fetched to say that if it breaks below the 653 mark, not like it just did, it just hit 652. But if it goes a little bit below that, we could see a pretty big drop on this support, because I think this is support right here. It's been here a few times, around this mark. We see this is 658. We see right here 648. So this is kind of a support level where it's bounced off of a few times. We bounced off right here. So it might just bounce off of it. The market might keep rising, but I think we're probably seeing the beginning of a pretty big crash. If not a crash, just a little bit of a correction, because I mean the market isn't up an insane amount. It's up 10% year to date, but there's just a lot of capex spending that a lot of companies can't keep up with, and we're seeing that in companies like Amazon, Microsoft. They're making a lot more money, but at the same time they're spending a lot more money because they're all trying to keep up with one another. Same thing with Nvidia, AMD. All these companies are spending a lot of money. That's why I'm trying to, what I'm doing in this market. That's why I wanted to talk about this. Is if you guys have seen my portfolio, I have pretty, even after this drop, I'd probably have around 26,000 in the stock market. I took a lot of cash out. I'm holding a lot of cash right now. I'm thinking that the market's going to drop even more than this. I'm still going to dollar cost average. I'm going to buy a few shares here and there of companies. There's some companies that are just too cheap to ignore. I mean, just like I said, Cake, way too cheap. Celsius is way too cheap. Amazon's getting to be pretty cheap. Definitely, thinking about going pretty heavy into Amazon, because this is a company that you should always buy. But the fact it's down 11% in a week, and then we see that it's actually trading down year to date, I'm feeling pretty good about buying Amazon right now. Even April right here is 167. You can see it drop there pretty fast, I think. So yeah, I mean, I think the stock market, obviously it's dropping a lot. We might see a small bounce back tomorrow. I don't know. I mean, I'm not predicting the market day to day. I'm just thinking that, with how the stock market is right now, we're going to see a pretty big drop pretty soon here, just among all stocks, which I'm happy for. And this is something that you have to take into account if you're a long-term investor, is you should be happy. You should be happy when the stock market drops, unless you are, at the age of retirement or near there. Then you should be cheering when the stock market drops. You should be happy that you can buy, the stocks you want for cheaper. Unless you're thinking of retiring in the next, few years, then you should be really happy when the stock market drops. I'm ecstatic right now. I have cash. I want to invest it in the stock market, and I'm going to start buying up some stocks that I think are going to do really well over these next, 5, 3, 7 years. Especially ELF too. ELF is crazy. I'm down 6% on my ELF position. At one point, I was up over 100% on my ELF position. They had a really bad earnings, and it wasn't even their numbers. It wasn't even their numbers that's bad. It's just some fear. So fear, I mean, every bad investor's favorite quote is when Warren Buffett says, good investors are greedy when others are fearful, and bad investors are fearful when others are greedy. Things of that nature. I mean, it's, you got to take that with a grain of salt, but at the same time, ELF again. I mean, these companies that are just taking massive hits for no reason are just easy buys. I mean, this stock's when I look at ELF, I'm like, did they peak at $210? I don't think so. I don't think they peaked in 2024 at, whatever it was, $217. I don't think that's the highest this company's ever going to trade for, and they're trading for $68 right now. That's a steal. And then if you buy the company for 68, like I'm telling you right now, and they drop to 40, buy 2 times more as you bought when they were 68, because these companies are trading for cheap, as it is already. Cake, Celsius, Elf. There's a lot of these companies. AMD maybe, wait a little bit on that, down almost 9% today, but still, I mean, I think it's a good buy long term. These are just great buys. Amazon, Google. Long-term buys, that's what you want to do. You want to build your long-term position when the market's getting hit hard. These are once in a lifetime opportunities, so the more money you have, the better. And yeah, that's all I have for today's video, guys. I did just want to talk about, some of the stocks that I've been buying, during this time, along with, Cake, SoFi's getting hit pretty hard. It's a pretty good buy, I think, long term. Celsius, and then also Elf, and then maybe some AMD, but then these inverse stocks are pretty good too. Palantir got hit pretty hard today, so we see I'm up actually 17% on this one. Not an insane long term buy that I'm gonna do, but this is just an inverse of Palantir that's been doing pretty good since I bought it. So that's all I have for today's video, guys. If you did enjoy, be sure to smash that like button. Also subscribe to the channel. I really appreciate the support. Thank you so much, and I'll catch you in the next one. Peace.